Hey guys, I'm Tim Kotzman here with Dan Hillery. Can you walk us through from an analytical and financial aspect, what rolled through your head when you saw MicroStrategy on their earnings call throw up this 42 plan, the 21 billion at the market issuance and the 21 billion in fixed income offering over the next 3 years?
Yeah. When I first saw it, I just gotten out of a electrical engineering lecture, and I was watching that interview or that presentation, literally tingling. I thought it was so exciting, but I really wanted to wrap my head around like, okay, what does this mean in terms of Bitcoin? Like, how many Bitcoin are they going to actually acquire? And I know it's something we talk about a lot. Like, will they get to 1% of the Bitcoin supply, which they did? Will they get to 2%? Will they get to 5%? And I needed to use a spreadsheet and model it out, put some targets in place just to see, okay, what does this mean and how many Bitcoin will they actually get to? What's it mean for their market cap? What's it mean for their Bitcoin per share yield? All of these metrics that we're trying to keep track of and that there's really no like historical precedent for. So I tried to make sense of it. I've got some bullish models that I think will be interesting for any MSTR shareholders or people looking to figure out whether the share price is going to go up or down.
Do you want to dive right in? Maybe share your screen?
Yeah, let's do it. So, Tim, for anyone unfamiliar with the 42 plan or the 2121 plan, it's just a capital raising target for the purpose of purchasing Bitcoin that's split between fixed income and at the market equity selling. And it's supposedly going to be split evenly with an increasing buy schedule over 3 years. You can see it here in this slide. And historically, MicroStrategy has actually outperformed their Bitcoin per share metric, which they're targeting to be around 10% annually. 6 to 10% is what they're reporting is their goal. This year, they're over 17% already annualized. And I wanted to see, okay, what sort of Bitcoin per share yield, which is a metric we use to figure out how much value we're gaining as MSTR shareholders relative to our number of Bitcoins held per share. What does the 2121 plan mean? How does it map out in terms of specific Bitcoin prices? And what kind of BTC yield will we be looking at over the next 3 years and then potentially moving forward? And then can that be used as a valuation framework for MicroStrategy? And Bitcoin per share yield is just, it's a metric for anyone who's unfamiliar. It's a metric of the total amount of Bitcoin that MSTR holds divided by the total diluted market cap of MSTR. So that includes any sort of conversions for convertible debt, right? That includes the number of outstanding shares after those conversions take place. So the first little model I have here is there's plenty of assumptions and I want to lay them out before we get into anything. So let me zoom in a little bit. I assume, so the 2121 plan is over the next 3 years. Okay, so this model just looks forward for 3 years, and it's not really a valuation model, it's more of a Bitcoin acquisition model.
Mm-hmm.
And what I assume is a 38% Bitcoin CAGR over the next 3 years. Anyone familiar with the power law, that's what the power law says. Even just based on Saylor's kind of diminishing exponential model, that would be, 38% seems reasonable.
Mm-hmm.
That's not to mention spikes and troughs, whatever. Let's block out the noise. Then that puts us at around over 200K per coin Q4 2027 and just steadily increasing for the purposes of this model. Now, this is the quarterly capital raise in billions, and that's split between half at the market equity selling and fixed income products. And I break it up evenly over quarters to hit those annual targets, which you can see here, 10 billion 2025, 14 billion in 2026, 18 billion in 2027. That's broken down here. Now half convertible bonds, half at the market selling. And I put a 40% conversion premium on the at the market or on the convertible bond. So the conversion premium is just the conversion price, how far above the current price of MicroStrategy as it's trading in the market, that the conversion price is priced at for those convertible notes, and that affects the dilution as a result of conversion when those bonds inevitably convert.
On the convertible 40% above the current price, I'm trying to recall, is that range historically been between 30% and 50%? I remember Ben Workman talking about the 1-0 coupon they issued at 50%, which makes sense. And so I'm just trying to maybe recall and discuss a range. And so
exactly.
And that's kind of where you're getting that average of 40 from, or any other inputs or thought process behind that?
Yeah, just for the purposes, I chose one conversion premium because I really have no idea necessarily what those premiums will be. But as you said, the range has been between 30 and 50%. And this is, you can obviously go in here and change it if you'd like, and it will slightly affect the share price based on those convertible debts, convertible bonds converting and diluting more or less.
Got it.
Then all of this is a function of MNAV. And everyone talks about MNAV as a valuation metric. MNAV is super important in terms of the rate at which MicroStrategy can acquire Bitcoin and the amount of dilution that occurs, or dilution meaning the amount of shares they have to sell to acquire that Bitcoin, and what kind of return we get as investors on the Bitcoin per share. So MNAV is critical to the conversation, and I'm definitely going to include it. And I have a lot of different assumptions that I'll walk you through. So finally, I'll show you then based on all these assumptions and metrics, I'll show you the assumed Bitcoin per share percentage increase, both quarterly and annually. And that's something that will be important going forward. So this is my first little model, and I call it a conservative cycle target. So you've got this Bitcoin 38% CAGR, 3 years, starting at 81,000 Bitcoin, $81,000 of Bitcoin in Q1 2025, ending in $212,000 per Bitcoin in Q4 2027. Right now, we're just below a 3.5 MNAV, and in this little outline, I increase the MNAV to a peak of 6 in what historically would be a Bitcoin cycle, and then decrease it back down to 3 in what would historically be a bear market, and increase it back up to 6 as we lead into the next bull cycle. And this is kind of historic Bitcoin cyclical behavior if you subscribe to that. Mm-hmm. And this is how the price would perform. So based on these targets and this acquisition, MSTR would acquire, they'd increase their Bitcoin per share by 25% based on the 21 plan in 2025, which is blowing their 10% annualized BTC yield target out the window. It's fantastic, right? Mm-hmm. This would be huge for shareholders, and this would put a cycle top target around $12,000 a share, based on an $120,000 Bitcoin price sometime at the end of 2025. And so for a lot of people, you may think the MNAV is a little too high, or maybe it's conservative, or maybe the Bitcoin price target here is conservative. And I've got a couple more models to address those concerns. So does that make any sense? Do you see what I'm working with here, what I'm trying to demonstrate?
Yeah.
And I think that it's also interesting to note is this idea of market cap. And a lot of people talk about market cap. And I know some of us in True North crew or Jeff was ready to bet on market cap with me. And I didn't take the bet because I wasn't fully thinking. I wasn't fully grasping how the market cap of MicroStrategy will continue to grow. And so as they do this, people say accretive dilution, or as they increase their Bitcoin per share, they're also increasing the number of shares outstanding. And as they do that, both with convertible bonds and with at the market selling, their market cap is going to increase even faster than their share price, even though their share price is increasing rapidly, right? And so, as you can see, based on this 21 plan, these cycle targets and these net asset value premiums, which I don't think are that crazy whatsoever, we saw a 6x MNAV in the prior cycle, and all I have it here is touching a 6x MNAV during this coming cycle. MSTR could have a market cap of around $704 billion come end of 2027. So there's going to be incredible market cap growth. And if you look at the increase in the market cap already, this accretive dilution coupled with Bitcoin's underlying growth just makes it such that this is really MicroStrategy is becoming like a behemoth much quicker than people realize.
Hey guys, today's episode is brought to you by Stampseed. I would just recommend that you go right to stampseed.com and check it out for yourself. I've held it in my hand. It's a titanium seed phrase storage device. This thing is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount on the entire website. That's TIM15. So if this is the conservative, okay, I'm not, just so everyone knows, I have no idea how many models you have. If it's we're going down the page, we're going to some other page. I'm not in the know. So I was going to ask, where's the bull fuel chart? Or
Tim, I've got some, I've got some real bull fuel for you. Don't worry.
Okay.
And after today, I think it's going to be very applicable. So let's do another bear case just to make sure everyone's relaxed before we go crazy.
That sounds good.
This one's also quite conservative. So I capped the MNAV premium at 3, which is a little bit below what it's trading at now. This shows the BTC yield as a function of MNAV premium, Bitcoin price, same 38% CAGR assumption, at the market selling, convertible bond selling, and convertible premium, all the same based on the 21 plan. And you can see here that the market cap grows to around $400 billion company in the end of 2027. And their total Bitcoin stack is over 500,000 coins at the end of 2027 with this 3x MNAV. And so the Bitcoins held at the end of the quarter is a function of their capital raised and the Bitcoin price. So unless the Bitcoin price gets out of hand very quickly, right? Like let's say it gets over $300,000 a coin in 2025 and stays there for 2 years. If that happens, they may not acquire $500,000 Bitcoins the next 3 years. But at any sort of conservative Bitcoin price target, it seems like there's a high likelihood that they do acquire 500,000 Bitcoins in the next 3 to 4 years. So I didn't realize how quickly these things will move, but as they keep scaling up these at the market and convertible debt offerings, they're only going to start increasing their Bitcoin per share even faster. So I would be very hesitant to say that MicroStrategy will never get to 500,000 coins, or MicroStrategy would never get to 1 million coins. This plan has illustrated that there's no stopping them. They're only speeding up. This gives you more conservative price targets. It would give you a peak in 2025 around just over $500 a share. And in 2027, you get up to $1,300 a share with a conservative BTC yield of 23% in 2025, 17% in 2026, and 13% in 2027 with this MNAV. So I don't see, so this, in my opinion, is a very conservative MNAV target. The rest of the assumptions are based on MSTR's earnings report. I don't see a world in which their BTC yield, and this doesn't account for slippage and some other fees associated with this at the market selling, but I think they're going to beat their 10% target quite heavily in 2025, 2026, and potentially 2027, especially if we see a bear market and there's still a net asset value premium.
That makes sense.
Now, I have one more steadily increasing MNAV target for 2027. So let's say you think Bitcoin's going to go on a tear for 3 years, no cycles. Bitcoin's going to go on a tear, same 38% CAGR, and there's going to be this increasing premium as people see the MSTR playbook and think it's valuable, that they want more Bitcoin per share. They love the sort of Bitcoin convertible debt refinery business model, and they keep buying, right? Based on these MNAV, this consistent increasing MNAV, we go through 2025 at a 4x MNAV, 2026 at a 5x and 6x MNAV, and then all the way up to a 10x MNAV in 2027. You're looking at a Bitcoin yield at around 20% annually, accounting for slippage, and a share price in the end of 2027 at $5,000 a share. Now we're starting to get into the bullish range of things, right? What's $5,000 a share? That's roughly a 20x from here.
Mm-hmm.
Now, I know a lot of people like to think this MNAV is kind of it's a construct. It's not really a valid valuation metric, and there should be a multiple to the book value of MicroStrategy. And so a lot of people think the MNAV, as a result of passive index flows, just bull market euphoria, will expand significantly over the next year. This model I'll call the MNAV doesn't matter model, and we'll see how the price evolves. So again, based on the assumptions in the 21 model, you can see the assumed share price. If we get to a 15x MNAV in 2025 and beginning of 2026, we could hit $6,000 a share. And that's a function of right? Investor sentiment, that's a function of passive flows, of front running a potential S&P 500 inclusion, and the other true north guys know a lot more about that than I. I'm just the guy with the numbers. And so I think if things get out of hand, that share price will get out of hand as well. And what I'm trying to demonstrate here too is a lot of people are concerned, okay, like what happens when the MNAV runs away? Won't Saylor crush the MNAV with the at the market selling?
Mm-hmm.
And this, I believe, is a false narrative, simply because in this model, I show the predicted and expected at the money selling and convertible debt selling. And realistically, Saylor could sell more one day or one quarter if the MNAV does run away, but there's still going to be consistent selling over time. And based on this selling, you won't get diluted in the way a lot of people who don't understand the playbook think. There isn't going to be shares just dumped on the market and the MNAV will collapse. The MNAV is a function of a lot of things. And over the past 3 years, we've seen at the market shares sold consistently into the market. And so I'd urge people not to be concerned with the selling, as the impact of the selling as a Bitcoin acquisition strategy outweighs the dilution that you may be worried about.
When you're talking about dilution, but it's accretive, in my mind, I just have this image of like every single shareholder. Like if you just think I'm a shareholder, I have my, however many shares, let's say I have 1 share of MicroStrategy. Well, every time they are issuing additional shares into the market, instead of thinking traditionally that, oh, I'm being diluted, my share is worth less, I just think of it as like, I'm standing on a beach and like the waves are coming up behind me and the wave is just like giving me more Bitcoin per share. Like there's more Satoshis just trickling into my share that I own. So like there's nothing dilutive about that. It's accretive. And, I don't know if maybe there'll be some very simplistic way that catches on to explain this, that, or if it's just going to be more of like everybody in the camp that wants to talk about Satoshis and not about Bitcoin. Like it's like, well, if you go on Cash App, you can switch between Bitcoin and Cash and Satoshis, but in a lot of platforms you can't. You're just looking at how many Bitcoin you own, and if you only own 0.00001 Bitcoin, it's just not that exciting to a lot of people.
Yeah.
But the share price and the market cap going up, similar to the price of Bitcoin going up, should, largely cure, someone that's looking at it and trying to figure out what's going on. But yeah, that'll be
completely. And it's a complicated function, as you're saying. Like it doesn't make a lot of sense if you're just new and looking at it. But I think one more thing, and it's to your point, like no matter what really happens here, as long as there's a slight premium over the book value of Bitcoins for MicroStrategy, which is justified by their leverage that they attain through convertible debt, you're going to get more Bitcoin per share owning this company. And so, as you're saying, I think that it's reassuring knowing you're standing there, you're doing nothing, and MicroStrategy is getting a little bit more Bitcoin every day into your share. And then one other piece of the puzzle, I think this is really important. So look at these numbers, right? You've got this huge net asset value premium in 2027 and 2026 relative to a lower net asset value premium on multiple to net asset value premium in 2025. You can see the BTC yield for those years. So in 2025, we got this 17% yield, a 16% yield in 2026, and you've got this 30% yield in 2027. That doesn't make any sense, right? Like the other models didn't have a BTC yield that high. And the reason is because of this MNAV premium. The higher this MNAV goes, the more effective share selling is at returning Bitcoin per share to shareholders. And something I think people really need to think about, right, is like everyone's worried about the MNAV, but anyone who really understands the strategy is hoping for a bigger MNAV because it just gives the management a lot more power in increasing Bitcoin per share. So I think it's something to be looked at and not traded. And finally, Tim, I have one more bullish model for you. Hopefully this will knock the socks off of everyone and give them the bull fuel they need. I can't compete with Jeff, and I really can't compete with Ryan in terms of bull models. I think you've seen some of them yourself.
Yeah.
Um, but this model is interesting because it goes out a little bit farther. And again, these models were just predicting 3 years in the future, right? 3 years isn't a long time. I predict out into 2032, so it's about 8 years of Bitcoin acquisition. And what I want to illustrate here is there's a few more assumptions made. So I assume MicroStrategy targets their 21-21 plan through the end of 2027. I assume a Bitcoin CAGR of 38% through the end of 2027. All the same conditions as before. And these are the market caps. These are the MNAV premiums I'm working with, 4, 5, 6, all the way through the end of 2027. So conservative MNAV premiums over the next 3 years, in my opinion. And these are the BTC yields, which similar to the first model I made. This is kind of my base case, what I'm thinking about in my head in terms of MNAV, BTC yield as a result of the 21-21 plan, and Bitcoin price targets, right? 38% CAGR over the next 3 years. And then as I extend it out to 2032, I drop the CAGR down to 33% annually, which if you subscribe to the power law, that's roughly the model. And similarly, Saylor's 21-year, 29% CAGR model, if you think that CAGR is diminishing over those 21 years, then 33% is roughly accurate. And we can see here that at the end of all of this, well, let me start over here. So at the end of the 21-21 plan, MSTR had 3 years of over 15% BTC yield, maybe subtract a few percentage points because of slippage, because of fees. Maybe their operating business isn't doing too well, you name it. So let's say they have a 15%, 20%, 25% annualized BTC per year, BTC yield. After that, they've stated in their earnings presentation that they're trying to target a 6 to 10% annualized BTC yield. They've outperformed that historically every quarter except in 2022. And as you can see here, I adjusted the amount of convertible debt they sell in 2028, 2029, 2030, 2031, 2032 to approximately hit this 10% annualized BTC yield. And I've split it evenly between at the market selling and convertible debt based on a 40% strike, 40% premium to the shares traded on the market conversion price. That's a lot of words. It's just the same as the models before. I'm just trying to target this 10% annualized Bitcoin yield. Let's get into the numbers. I think people are going to like the numbers. So here, that means Bitcoin, based on this model, will be trading at around $885,000 a coin in 2032. I know it sounds conservative to a lot of people, but that's what I'm using for a base case. Just shy of $900,000 per Bitcoin in 2032. At that point, MicroStrategy, based on the 2021 plan and their 10% BTC yield target, would own almost 1 million Bitcoin at that point. If you believe they can consistently perform at this 10% BTC yield, and if you believe a 6, 7, 8x MNAV in the latter half of the 2020s is appropriate. If you believe those things, they could definitely get up to $1 million per Bitcoin. They could definitely get up to 1 million Bitcoin owned. Now, let's look at share price, right? Share price is a function of MNAV and the amount of debt they sell into the market. So if you extrapolate this out, think these MNAVs are appropriate, then that puts you at a share price in 2032 of $34,000 a share at the current split. $34,000 a share sounds pretty good to me. I don't know about you, Tim.
Yeah, that sounds great.
Yeah. What's really interesting about that is how fast their market cap grows, right? Okay, so we're shareholders, we're happy, we got Bitcoin per share increase, our share price went up. The thing that really breaks everyone else's model is the market capitalization if they continue to increase BTC per share at 10% annually and the MNAV trades at significantly above, a 3, 4, 5x premium. You'd be looking at a market capitalization of almost $9 trillion based on this model. And I think this is definitely bullish, right? This is a very, very bullish case, but you have to understand that in 2032, what will the MAG 7 be worth? What will their market capitalizations be worth? And these are all factors you have to consider. So maybe $9 trillion isn't even necessarily the number one pubco. That's completely possible. Mm-hmm. And on top of that, one more thing I want to look at is their debt ratio. And debt ratio is something that Ben Workman talks about a lot. His point is that MSTR the board at MicroStrategy and the management team has tried to keep the ratio at about 25% debt, right? So out of their entire Bitcoin holdings, 25% is represented by these convertible notes. And this is important, right? That's what they consider intelligent leverage. And it seems like they're going to be targeting this sort of percentage leverage moving forward. If you think that's the case, they're going to have to increase both the at-the-market selling, which seems to have no limit, just based on the 21-21 plan, and also the amount of convertible debt they offer and the fixed income products which they offer. And as you can see, as we get later into the 2020s, if you want to maintain that 10% BTC yield, the amount of convertible debt they're going to have to be offering per quarter is going to become quite incredible. Just to keep up that yield based on these net asset value premiums, in 2030, they're going to be offering, they would, in theory, right, this is all theoretical, they'd be offering over $4.5 billion worth of convertible debt a quarter. So is the demand there is a question. And right now there seems to be no slowing in demand. Maybe they'll come out with all sorts of other products that are appealing to fixed income investors or volatility arb traders, like the convertible bond traders that are buying up the debt now. But a lot of things will change. But based on this analysis, I think the share price is going up.
Can you walk us through your thought process when it comes to MNAV, and maybe just at a higher level, but also maybe walking us through 1, 2, 3, all the way up to the 10 or 11 or whatever the highest number is that you had on that model for MNAV? And I know that you said through the, kind of the bull cycle, the bear cycle, that's part of it, but what other considerations, if any, did you put on the MNAV considerations?
Sure. Yeah. MNAV is a tough one. Everyone talks about it. And some people think it may trade at a number similar to price to earnings ratio. Some people think it should be 1. Some people think a lot of different things. And ultimately I settle on the model I use in my own head is that MNAV isn't what you want it to be. MNAV is a function of sentiment, market design, and sentiment, market design. That's pretty much it. There's no justifiable MNAV in my opinion. There's just supply and demand, right? Who's buying the shares? How many shares are held by passive indices, institutions, retail who won't sell, and who is selling into the open market? Who thinks MicroStrategy is overvalued, or who's getting out? Whatever it may be. And I think chasing the MNAV is going to be very hard, or trading the MNAV is going to be very, very, very difficult. Mm-hmm. And I think MNAV is also a function of sentiment regarding Bitcoin price, right? Like if Bitcoin's ripping during a bull cycle and people think the price of Bitcoin will increase significantly in the short term, that sentiment will be reflected in the multiple to net asset value, simply because people are going to be buying up equities recklessly, right? Bitcoin proxies recklessly, and MSTR's outstanding float is significantly less than that of Bitcoin, which will push the MNAV higher than people may think. But ultimately, I think MNAV will continue to fluctuate over time. Mm-hmm. And the higher it is relative to their underlying Bitcoins, the more advantageous it is for MicroStrategy and push to the rate at which they can acquire Bitcoin per share. So it kind of feeds into itself. That's the weird thing, is when you really think about it, is the higher the MNAV, the more effective the strategy. So what does that mean? Investors want a high MNAV. Oh, so investors aren't really incentivized to sell at a higher MNAV. That's weird. Wouldn't that push the MNAV even higher? So I think things can get out of hand, but it works both ways. Leverage works both ways.
What do you think about on the convertible debt part, if they decide to offer a product that's zero coupon, so there's no debt service associated with it, and there's an appetite for it, and backing up for a second, basically from the beginning of all of this, and it was on some podcast somewhere, I didn't come up with it, it's like, well, Saylor's just doing a leverage buyout of the Bitcoin network. Like when I heard that statement, I was like, oh, this is going to be awesome. So like putting, as Puncher Jeff would say, foot on the gas, if he would decide and the market conditions were there to just maybe do more than planned on a zero coupon sort of instrument, what do you think that could do to the MNAV and to the market sentiment, and just what do you think would happen in that scenario?
Yeah, that's a good question. And I think my response would be two parts. One, if he was pushing 0% coupon debt, a lot of people who don't understand the playbook would get quite excited. And they'd be like, oh, they think to themselves, oh, he can load up on all this debt because they don't need to fund the coupon payments with their operating business, which a lot of people think is underwater. And so I think that might help sentiment. But is it actually necessary to continue their strategy? The way I think about it, I don't think so, right? They can fund these coupon payments, which are extremely low right now. The blended weighted average annual debt expense is about 1.2% of their total outstanding debt. That's a very low interest rate, right, annually. They can pay that with a very small amount of share selling into the market. It's a rounding error in terms of their entire at the market selling, which just funds this even more accretive convertible debt selling, since it's at a 40% premium to the actual premium to the underlying Bitcoin. So I don't think it's necessary going forward. But if a bear market came and the MNAV contracted to a maybe a 1x multiple again, that 0% coupon debt would be very, very attractive and helpful, right? Because that premium is what allows the at the market selling to be accretive, and which allows them to fund the debt financing via share selling. So would it insulate them even more during what could be another crypto winter or bear market? Yes, absolutely. And does it just kind of, it sort of promotes this idea that their convertible debt is incredibly valuable. So I think it would be great if they did it, but I don't think it's necessarily the only way they need to offer this debt.
Is there anything else that you want to cover either on your model or adjacent to that before we kind of zoom out? Just have a couple of more kind of market macro.
Yeah. My model doesn't even include other forms of fixed income, which they mentioned in the earnings call that they might incorporate into their strategy. And this idea of BTC spread is something that was brought up on the earnings call as well. And BTC spread is essentially the value or the amount of Bitcoin that are captured when they sell a convertible debt offering. And that's a really, really impactful idea for anyone trying to wrap their head around the strategy. Is that when these fixed income products are offered to investors, the investors are exposed to almost no downside, very little downside, and less volatility in the form of full-on fixed income products, right? Ones with no convert option, just a annualized payment. They're exposed to no volatility. And in return, they don't get all of the performance of MicroStrategy's equity, right? That's kind of that's the trade-off. And so the way I think about it is they can probably engineer products for investors that have an increased BTC spread or a higher BTC spread than the convertible debt. So for example, a fixed coupon bond, right? If they're just paying 6% annually or 10% annually to an investor, no conversion requirement on $1 billion worth of debt, and they can finance that coupon payment with ATM selling, and you believe Bitcoin's compounding at above 30% annually, right? That's a 20% CAGR on this borrowed money. And I think that is something that people need to realize is possible now with the scope of at the market selling. And it doesn't need to be financed by the operating business. The operating business is allowing all of this to happen, but it's not funding all of this debt. And it won't fund all of this debt. It can't fund all of this debt. The at the market selling, the premium justified by leverage is what's funding all of this, these convertible debt opportunities.
How important do you think the new administration regulatory environment is now and will be going into early next year regarding market sentiment? And the reason I'm asking the question is, as I'm scrolling through the posts that people are making today, there's a lot of excitement in the like Bitcoin Twitter community where it seems like the theme, at least yesterday, today, we're recording on Thursday, just 2 days after the election, that a lot of accounts, a lot of individuals are saying something to the effect of people are not understanding just how encouraging and bullish and positive some of these developments are for digital assets, for Bitcoin. And there's like obviously dozens of different trails and rabbit holes we could go down as far as the potential for SOB 121 to be out of the way, for banks to custody Bitcoin. Do you think it's just still early and the market's, it's going to, Ben or Jeff, I think, said the phrase regarding something else, it's going to take the market a few weeks to digest the earnings call from MicroStrategy? Do you think in the same way it might take a few weeks for the market to digest some of these new realities? Or do you think that Bitcoin Twitter is just like kind of the same as usual, which is like a little too optimistic or too excited, which I would put myself in that camp as well?
I think it's a good question, and there's people that know a lot more about this than I. But the one thing you brought up with SAB 121, I think it's super applicable, and people don't talk about it. People talk about kind of this this generalization that digital assets are going to be more favored by the current administration, which clearly is the case. But in terms of actual rules, right? SAB 121 had bipartisan approval, and it was vetoed by Biden. And the next time Congress meets, it could be brought up again and hopefully will be passed. And what that allows is previously banks had to mark down their digital assets that they held in custody as liabilities on their balance sheet. And so it was unprofitable and reduced their the ability to lend out money to customers, since it was considered a liability prior to the approval. So once SAB 121 is approved, the incentives are there for banks to custody digital assets, as they can, I think traditional fractional banking requirements will apply. And so I think it's one of those really important conversations around incentives. When big institutions have the incentives are aligned to custody digital assets, and as it's becoming more and more demanded by ETFs and publicly traded companies, I see no reason why they wouldn't. And once the biggest banks in the world are involved and make money off of this custody service, I think the narrative will change very, very quickly, very quickly. So I believe that to be a huge driving force moving forward. Follow the money and follow who has access to the money. And once the big institutions are able to profit off this industry, forget it. The floodgates are open.
Have you heard in any of your conversations over the past day or two any sort of confirmation or around the options on the Bitcoin spot ETFs products, that those options trading this Friday, as in tomorrow? I've seen a few accounts say that on Bitcoin Twitter, but I haven't seen anyone really verify it, or any stories out of Bloomberg or any of the accounts from the analysts that would cover it really saying like, oh, this is happening. And I don't mean to put you on the spot. I legitimately don't know. And I think I got that question from someone today. So just curious if you had heard anything either way on that.
Yeah, I saw some of those posts as well. wouldn't say I'm quite certain, but I'm pretty sure they're not going to start trading on Friday. I think we would have heard more about it, but
Yeah.
I'm not the one to ask.
So I've heard from a mutual friend of ours that when you're done with your studies up north, that you might be potentially considering moving to Miami. One, is that the case? And two, is there any way that I could convince you to move to New York so that we could hang out?
I was thinking about it, Tim. I was hanging out with you at the office a couple of weeks ago, and I thought, wow, this place is awesome. These guys are all interested in what I'm interested in. It's weird because we're all friends online, and we all kind of are interested in the same thing, but we're all from different walks of life. So I think it's awesome being together in person. I've had the greatest time meeting all of you, in real life. But yeah, the no state income tax is quite appealing, especially moving into 2025 with a lot of call option exercises on the horizon. But they say that a tax is just a handicap. You have to trade better. So maybe I'll take it as a challenge. Move to New York, and I'll be around you, and you bring a lot of good luck. So maybe that'll help my destiny.
We'll just have to keep on wearing the orange ties and see what happens.
Exactly. Yeah. Or just never sell, right?
Yeah. Yeah. Just like the meme. I forget the exact meme, but yeah, it's something about never selling, right? And people are dancing around. So, that's always a good strategy.
Yeah.
Well, thanks for the time today, and look forward to catching up here sometime in the next couple of weeks.
Thanks so much, Tim. It was great talking to you. Hopefully my model was comprehensible and helpful and bullish for everyone watching.
I'm going to look forward to all of the comments, and the nice thing about social media is when we post this, it just is kind of the beginning of continuing the conversation. So it's always great to learn from everybody.
Definitely.
Awesome. Thanks.